Hey, this is Todd. I want to talk to you once again about the 3 boxes that need to be checked in order to get a mortgage. So I've always said a lot of people think you get a mortgage on a house, but you don't. You get a mortgage on your ability to repay a loan. And in order to do that, you've got to check these boxes and check them in this order. Box number 1. What is your history of paying people back you borrow money from? That's your credit. Credit ranges from 300 to 850. The average credit score in the United States right now is about that 716 marker. And that's what we've got right here through a CNBC website. We're going to go with that. So when we look at scores, that's good, right? You're in the average category. Ideally, the higher your credit score, the cheaper life is. There is a link here to another video that I explain credit. So we're on to box number 2 right now, which is the debt to income ratio. This is, do you have the ability to repay this loan? So we take all of the debts that you currently have, add the new mortgage to it, subtract any rent or current housing, because this is going to be your new housing, and that comes up with a ratio. So let me show you something. What I've done here and what I do for a lot of my clients when we're talking about this is I actually run a scenario that looks like this, that basically says, okay, you're making $9 grand a month, your partner's making $8,000 a month, so it's 17 grand combined. This is a scenario we can change it to whatever. You're looking at buying a house that's 850 grand, you want to borrow $765,000, and the interest rate is 7. We throw in the taxes on what we think they're going to be in the insurance, so we've got a number, and that total monthly payment's going to be about $5,870, right? Now here are your current debts, however. You got a mortgage on your house right now, and you've got a couple of car loans, you've got some credit cards, things along those lines, and all of your current debts combined are about $9,700. So when we're looking at this, we need to get your total debt to income ratio. That is the housing payment, which they look at as, they call it sometimes your front end, and all of the debts combined to be under 50% of the total take-home income. Well, a couple of things on this. So it's going to tell me on this, I want to reduce the total debt to income down to under 50%. In order to do that, that's another 7.234% of the total income that has to be deduced, which is about $1,235. So in general, when we're looking at that, what we can do then is a couple of different things. Obviously, if they're going to sell this house, problem solved. Right now with the debt to income ratio is going to work. If they're going to keep the house, I better go back, I don't even know what that was. The other thing we can do is, let's say, well, what if they're going to rent the house out and they think they can rent the house for $3 grand a month? Now, the way the mortgage world works, you can't use all $3,000. You actually can only use 75% of that when it's going to be calculated. So just so I can show you the total math, you're getting $3,000 a month, and we want to be able to utilize it. We're using 75%, so that's $2,250 in additional income. When I throw the $2,250 in there as if you were receiving rent, we're almost there. Not quite. So I still need to knock down about $100 and some a month. So the reason these are color-coded a little differently is because I'd go back to you and say, well, all right, when we're looking at the total debts here, what can we eliminate in order to be able to get you under this total debt to income ratio that you want? And it's simply just saying, all right, well, this is pretty easy. It's $25 a month. We're going to pay that off. And then the biggest impact that we're going to have is probably, instead of paying off this $5,500, it's going to save me $81. This $4 grand is going to get me there. So if we were to pay off those debts, it'll get us to where now we're underneath that 49.99 level. Still a little bit of a caution. We're up against the maximum that we want to be, but it meets the criteria necessary in order to get us an approval. So this is step 2. In another video, I'll talk about the 3rd step, which is your cash to close, how much money you need versus how much money you have. But this gives you a pretty good idea of going through literally how simple the mortgage process is. Once again, it's, you don't get a mortgage on a house, you get a mortgage on your ability to repay the loan. Thanks so much. If you got any questions, feel free to hit me up. If you want a copy of this or want to walk through this on your own, happy to do so for you. There's lots of these videos on this channel. Go ahead and click like and subscribe and have access to all of them. If you need anything more from me, don't hesitate to reach out. Thanks so much.